Well. Netflix just delivered their earnings, and we're going to break down today what their earnings were like, what they had experienced this quarter, what they expect to go through in the future quarters. Is Netflix today a good buy? And where's the valuation at in comparison to other companies that we might want to put our money into? We're going to break all of that down today, so make sure that you guys are following for stock content like this. Let's get right into it. Now, Netflix posted a earnings beat and revenue growth of 16% in Q2, the second quarter of this year. Now, by them growing 16%, this is pretty substantial considering that they are in the media industry, but given that they are in the software industry, these are kind of good revenue growth numbers. However, a lot of companies aren't even coming in this hot. But let's just go through the standard numbers that we are looking at today. It's very healthy for member growth. We know that they have the lower tier subscription that you can get for, I believe, $6.99, $7.99. But you can pay as much as $15, I believe, every single month. My parents pay, so don't ask me. But Netflix is a pivotal business that we use every single day in our day-to-day life here at home in my household. Going through their whole earnings report, you can see that their revenue was 11.08 billion, and this is right in line of their estimates of Wall Street. Now, the Netflix company really came out and said, we're going to expect full year revenue to be anywhere between 44.8 billion and 45.2 billion versus their range that they had given before of 43.5 and 44.5 billion. Now, this is a raise in guidance, and this should be doing good for the stock, but we'll see as to why that hasn't been doing good for the stock as we can go over to Netflix as a whole today. This stock is actually just down 1.8% after hours. We don't like to see that, but that is the reality. And what expectations did we really have going into this? Now, previously, Netflix may have given guidance on subscription data, but now this is the second quarter that they are not going to release quarterly updates on subscription data. We know that their pricing has changed. And what does that mean for subscribers or subscriber growth? If they are lowering a tier, if they're increasing prices, what does that mean? How many people are really subscribing? We don't know. We can only guesstimate from here. Now, the company states that year-over-year revenue growth was primarily a function of more members, higher subscription pricing, and increased ad revenue. Now, when it comes to EPS, they came in at $7.19 versus $7.08, what analysts expected. Revenue came in almost flat, a little bit better, but we know that what drives corporate profits and the stock to go up, it's EPS and cash flows at the end of the day. So a lot of this fluff really brings them down to 1% after hours trading. Who knows what the stock will open at tomorrow? It's at minus almost 2%, I guess. And let's just look at the headlines. So Netflix profit surges. They had a crazy beat. EPS beat. Revenue was a beat, but it wasn't enough for the stock. Now, what's the reason as to why? Is it because they're raising prices? Is it because people think that when they raise prices, they're not going to be able to have subscriptions, that growth to fulfill themselves going forward that they've had every single year up to now? But let's look at the stock and see where it's trading at to just understand its valuation. Looking at year to date, we could see that over the past couple of months, half a year, you've been able to see a 43% gain in Netflix alone. That is immense. Now, they're trading anywhere between a 60-ish PE ratio, price to earnings ratio. But let's just look at the company overall. This is a very, very good company by the books. They are growing everything. You like to see these charts go from bottom left up to the corner top right of our screens here. Now we can see that looking at revenue, it's been going great, growing really fast. And we can see that in net income, it's been also growing pretty fast here. But the one thing that I want to draw my attention to here is free cash flow. How much are they increasing free cash flows by every single year? It hasn't been too much. My guess is that they've been funneling a lot of money into original series like Squid Game, maybe K-pop Demon Hunters. I don't know. a lot of these original series that they're putting the money into really weighs down on this free cash flow piece here. But over the course of time, they've been able to buy back their shares at a decent 1% rate every single year. And that's really going to be one of the ways that they give money back to the shareholders, whether they invest in original series or buy the stock at cheaper prices. Those are both really ways to add value back to shareholders. But let's look at valuation metrics. P ratio of 58. I don't really know if I like a 58 PE given that top line is only growing at 15% and free cash flows have been growing at 7%. If you look at other companies, let's say media business to media business overall, let's compare them to a Meta platforms, Facebook, Instagram, WhatsApp that we know today. Facebook trades at a 26 PE, but you're getting 19% year over year revenues with free cash flows growing around 5% in the past year, while they're growing their share buybacks every single year, buying back their shares at a 1-ish% per clip per year. You're almost getting pretty similar growth, if not a better industry, because it's so diverse. You have Instagram, you have WhatsApp, you have Facebook, Oculus. Now you have the Meta glasses. If you think about it overall, both are competing for eyeballs, your time, your screen time overall. Now, which one is growing faster? We can clearly see that Meta is growing faster with a higher valuation, but also a cheaper multiple. Now, Meta is a $1.7 trillion market cap company, while Netflix is a $500 billion company. It is almost 3 times as big as Netflix. Now, the reason that Netflix is valued so highly must just be their consumers really believe that Netflix, with their original series, can and will grow subscriptions over time while adding original series. Whenever my family is competing for screen time, we are going to pull up Netflix, we're going to pull up Hulu. Those are the basically 2 options for us for watching shows and watching movies. But when it comes to social media and my eyeballs, where I'm going to spend my time, a lot of it is spent on Instagram or Facebook, like old people. So that is where Meta has its edge here. Personally, if I were to throw my money into Meta platforms, Meta stock, or Netflix, I think I'd choose Meta all day. Just because the valuation is just cheaper on a price to earnings ratio by almost half, more than half. If you look at free cash flows, it is trading at a price to free cash flow of 33 Meta. Compare that to Netflix, it is trading at a price to free cash flow of 73, meaning that Netflix is almost 2 times as more expensive. And for what? I just don't like the valuation that Netflix is at. I wouldn't be adding this to my portfolio at the time. If I were to add anything within media, eyeball attention platforms, it would be Meta platforms here. Facebook stock, Meta. And that's pretty much all I do. But let's take a look at Google. I think Google is a really good value proposition if you're going to compare this to Netflix. Big tech overall, you're getting something similar in the revenue area of 13%. You're getting free cash flows that are growing at 8% while paying a 20 PE, which is what? A third of the valuation of Netflix. Free cash flow on a valuation basis, you're getting less than half of a valuation when it comes to free cash flow multiples. I think Google is just the way to go when it comes to big tech. They're buying back at 2% every single year. It just makes more sense. I think if I'm going to buy anything big tech, it's going to be Google over Meta. But if I were to choose between media to media industry businesses, Meta over Facebook, but Google over Meta at the end of the day. So that's all I've got to say when it comes to Netflix earnings, comparing them to Meta and Google on a valuation basis. Now, let me know, are you a Netflix shareholder and are you happy by today's earnings? And if you were to add to any company in big tech, which one would it be and why? Thank you guys so much for watching. Make sure you guys have a great day. Make sure you guys are subscribing for more stock content like this, and peace out. Peace.